Welcome all to this live webinar. As you know, I'm going to make a small presentation, and afterwards you can ask me any questions. The fact is that I have been working with this beginner corner and with fxtrade.com since early this year. And the idea of the beginner corner is not only to teach and train novice traders, right? But also to share tips and tricks for an experienced trader. I do find out that, or I do believe in fact that it's much more interesting to see different traders' ideas or approaches to the market, right? To learn a bit of everything. At this time, we had made a special webinar a couple of weeks ago with Dale Pinkert, right? So we are going to review his trading strategies and talk a bit about what he taught us. He shared with us different tips of his market approach, and that's what I'm going to present today, adding, of course, my personal point of view. But let me tell you that over the years, I found out that despite having different education, coming from different trading styles, and approaching the market with different views, right, there are several things that all four experts had in common. So the idea of this renewed Beginner's Corner is to share and understand those common points that may help you improve your trading, okay? Anyway, let's start by reviewing Dale's trading approach and talking a bit of what he shared with us and how we can apply it for us. One of the first things he said that come to my attention is that the fact that a chart is chart. That's the word he uses, right? The only difference is the type. And he also added that once you learn to trade one, you can trade either a euro or soybean. The fact is that he's not totally wrong about that. In fact, I do agree a lot with him. And I will take as an example these two charts. As you can see, I have removed the names, right, and the prices, so you don't know what we are talking about. Take a look at them. Quite similar, right? Price behavior is practically the same. So if you're going to trade either one of these two, right, the results will be almost the same with the same technical strategies or technical indicators. Well, both, as you may want to know, are 1 hour charts, one for gold and one for Aussie dollar cross, okay? As you can see, the behavior of both charts is particularly the same in this particular time frame at this particular time. It's not that every chart will perform the same behavior 100% of the time, right? But the idea is that once you learn to read one chart, you will be able to read any chart, right? It's a very basic concept that many Forex traders, successful ones, of course, share, right? It's not what you're trading. It's not worth to focus our attention 100% in euro dollar. Once you learn to trade one chart, you may be able to trade almost anything, right? Of course, anything is as easy as I make it sound right now, okay? A chart is a chart, candle may be a candle, and technical indicators would probably show exactly the same in those two charts. However, he added that we must learn to focus our attention in price action. And that's a very big truth for saying so when it comes to trading the Forex market. The fact is that most of the strategy is based on price action and understanding it is price action, okay? I do also agree in the fact that understanding price action and not relying purely on technical oscillators, indicators, moving average is the first key to success. Let me make it this clear. I'm not condemning the use of technical indicators in trading. Of course, I do use them, right? In fact, I do use them myself on a lot. But be aware that all those technical oscillators and indicators tend to lag, right? By definition, we know that technical indicators or oscillators use historical data, historical information to help us forecast future movements, and usually give us the information a bit too late, right? We see a selling sign after a pair has already lost, 50, 100 pips in the short term or whatever. Meaning, we have the price action first, right? And the technical indicators signal then, right? we have first price reacting. That's why I believe that focusing our attention in price action is also very, very important. One thing, we are going to discuss this indeed, but one thing that you may want to understand also about trading with oscillators and indicators, right, is you know that the market could be either in range or in trend, right? Most of the time, market is in range, and this is when things get a bit more complicated. We know that oscillators and indicators work best during trending markets, right? But of course, when we are in the middle of a trend market, I don't need too much of a technical indicator, right? No one actually does, because we trade with the trend and we will probably generate profits, right? But the question is that when we have a sideways market, right, oscillators and indicators will tend to give us more false signals than when we have, of course, a trend clear in the chart, right? And talking about this, I wanted to remark here the importance of detecting a trend, right? A trend change, a bottom, a top. As earlier you detect trend, as larger your profits will probably be. And the easier will be your trading, as you will be having just to follow that trend, right? Anyway, all of this is an introduction to what I want really to present right now, which is this. Price is everything, okay? Price is everything. Even Charles Dole, who developed all the technical analysis, that was the father of trading, right, said it so in his principles, okay? Price reflects everything, the fundamentals, the relations, the new prime ministers, the old devs, and everything else, right? So that is why it's so important to learn to read charts and understand price action, right, to be able to start our path to success, right? So basically, forex price action is a trading strategy that analyzes the price behavior and the patterns that have formed that behavior in the chart. I believe that, as I told you already, most of the trading strategy is based on this price action, right? So the idea today is share his and my tips and tricks to deal with price action and make it a bit more practical, right? So I know that understanding price action is not about opening a chart and being able to perfectly read the chart in the first time around, right? Understand everything what's going on just with a glance. It takes some time to understand it, of course, but eventually I believe that it becomes second nature enough, right? As seeing the chart and understanding the price action. It's also not a difficult skill to acquire. I believe that the best thing you can do to understand price action, and this is a general introduction to this matter, is to place your body in the chair and take a look at charts, right? Take a look at charts. I would say no more than 4 or 5 hours a day, right? Not much more than that. If you spend more time watching charts, you will get like hypnotized and you will lose objectivity. The chart had an hypnotic condition that affects neuroscientists, really. And if you spend more than 5 hours in a row watching price action, you will come into a state of mind whether you won't be able to take any kind of trading position. But sitting in your chair and watching how the price behaves to different market things, market conditions, market reactions, right, is the first step to become a successful trader, and I totally agree with Dale in this one, okay? Anyway, let's start by taking a look at in euro-dollar per hour chart and see what we can detect from this chart, right? As you can see, it's just a 4-hour chart with no technical indicators and nothing much more added to it. So the first thing I can see in this technical chart, right, is this area around 38.60 that has been limiting the upside since early past week, right? Not only early past week. If you take a look at the historical of information and scroll your screen back once, twice, or three times, you will find out the price had tend to add around that level, right? Either side of the board, even if the pair was above it or below it, the price has there a strong level that is not an easy break. At this point and right now, for current technical analysis, for today's technical analysis, let's say, I will set that this is a strong selling zone for this particular cross. Okay. If I keep on watching the chart, I will start seeing a lot of different things. For example, I see that the pair reached a low, right? And from that point on, we have higher lows and higher highs developing, right? This is telling me that the bullish trend has been developing over this day. However, we reach a point, right, where we have bearish candle, which high wasn't able to overcome previous one, right? That is my first signal that a probable reversal in that bullish trend may be starting. The fact is that after that first candle, okay, we have a second one with a lower low and a lower high, and a third one with lower low and a lower high, and so on, right? This second one, okay, it's telling me that the bearish movement has started, right? So without the need of adding technical indicators, I'm gathering a lot of information just from the chart, okay? Another thing that I found interesting from this particular chart, right, is this kind of candle. Something I pay a lot of attention, and I have shared a couple of times in previous webinar, but I do believe it's worth to remind, okay? Take a look at that bearish red candle marked inside the gray circle. As you can see, that candle is twice or sometimes three times the average the pair tends to move in the 4-hour chart. This candle is telling me that volume, the strong volume, the market as a whole is selling the pair. And this long candle is telling me that the bearish pressure will probably continue and extend, right? And in fact, it did. If you take a look at your chart, you will find out that you don't need to add a volume indicator to determine market volume, okay? If you watch it, you will find out that particularly in big sessions, right, London, New York, or Tokyo, when you have a candle that tends to double or triple the average of a candle in this time frame under study, then you are seeing a lot of volume in a certain direction for market, okay? So anyway, these are just some examples of what we can find out by just taking a look at price action. I believe that there's much more information we can gather, and we are going to take a look at a couple of those things we can find out from charts, from price action itself, according to Dale's approach to market. But let's see what we get from this chart, right? So just taking a look at the chart, we have discovered that we have a strong selling zone around 138.60 right now. We have a top and a red candle that wasn't able to overcome previous high, right? And suggests the beginning of a bearish rally. Lower lows, lower highs that lead to that bearish rally, but previously we have also higher highs and higher lows that lead to a bullish one, right? We have also detected bullish candles that signal a probable continuation rally. As you can see, there's a lot of information we can take out of price action that may help us to determine where price is leading, right? And what I believe most important is determining the beginning of or the end of a trend, determining top and bottom. For example, and we are going to get into the practical side right now, they explain that he pays attention to a certain pattern to detect tops or bottom. He called it 3 tribes to top, okay? As you can see in this dollar Swiss franc daily chart, right? The price has moved higher, moved higher, right? Setting a fresh high, right? Corrected slightly quite above previous low, extend the second high, right? Again, correct around the 50% of that rally, and made the third top, right? After that third top, that completed the cycle, the fact is that the pair lost around 800 pips, sorry. So this is a pretty interesting formation. However, I believe that just with price action, okay, we cannot determine if this movement will probably continue rising and expanding, right? Or if the corrective movement will begin. One of the first things that signaled that the prayer may start a corrective movement was this long body candle, right? As you can see, this bearish candle that is mostly body, okay, is almost twice an average, right? So that's the first signal the bearish pressure has started. But Dale has told us that he uses technical indicators, okay, to filter this kind of strategy. You have the three tops, or three dives to the top in this particular case, or to the bottom, of course, in our bearish rally, sorry. You may see that another good way to filter this is taking a look at the market and seeing if we have the technical divergence with some big indicators. I believe that this kind of thing should be analyzed in daily charts. I don't believe this kind of thing can be analyzed in 1 hour time frames or smaller, right? Maybe 4 hours one, but in daily charts the reading will be much more accurate. So, as I was saying, he uses technical divergences as a confirmation. As you can see in this $50 same chart, with the three higher highs, we have the momentum indicator heading lower and lower. And in fact, approaching to the 100 level once we set the third high, right? So, the first candle after the high, okay, it's a strong selling candle, but we have a strong technical divergence in the momentum indicator. The momentum indicator then is filtering, right? It's acting filter for this trend if either is going to continue or retrace, and it's telling me that the chances of a retracement due to the strong divergence we see in the indicator. Okay? Another way to filter with indicators, right? According to his approach to market, and I find this one really interesting. It's checked if both price action and technical indicators had reached important lows or highs, right? Historical ones, or I can't find the right word. I was about to say relevant ones. Okay, in this particular case, take a look at the dollar Swiss franc daily chart. Okay, this is another example. As you may see, I have the market also daily chart bottom. The pair made around 170 record low, right? At the same time, the relative strength in the set a record low also, right? Watch that. Watch the fact that when price action, along with a certain technical indicator that tends to show us oversold or overbought conditions, in this particular case, relative strength index, but you can use commodity channel index or ADX or momentum even so, right? If you see that the technical indicator also reached an historical low or historical high at the same time, right? There is a good chance you are seeing the beginning of a new trend as you are seeing the end of the previous one. Of course, it needs further confirmation, right? At this particular point, sorry, I lost the mouse there. We don't know, at this particular point, we don't know if there is price going to continue falling, right? Or reverse. Of course, the indicator reverses over the upcoming 3 days. And so the price, right? So that confirms bullish continuation rally. However, we have a strong reversal around 77.38. I would say that this level, this area is the one that confirmed the reverse, right? the V shape broke into the upside, the strong comeback in relative strength index and in price with a strong volume candle, right? And if you consider that from that 77 we jumped to 93, okay, it was a pretty interesting bullish run we have seen in here. Of course, in this particular case, price was also influenced by the Swiss National Bank that pegged the euro to the Swiss. But one way or another, the technical indicator and the price action are acting together with the fundamentals to give me accurate trading idea. Okay? Another concept that they share is the idea of trading with price actions in regards of support and resistance areas, right? We understand a support or resistance, a level where the offer equals demand, right? And price tends to have, right? The sellers are fighting with the buyers, right? And of course, at some point, one or the other will win the battle, okay? All supports and resistance are there to be broken, okay? Not to hold forever. If not, trading will be a piece of cake, and it's not, right? There's a chance that the support or resistance gives up or not, but at least temporarily, price tends to have, right? We know the idea that as more times the price has in a certain zone or area, right, stronger is that level of support or resistance, right? And if price breaks through that level, right, stronger will be the continuation rally once it's broken, right? So as more times the level is tested, stronger it is. And as stronger is that level, stronger will be the continuation rally once broken, right? So anyway, based on the concept that market tends to shake off fast as many traders as possible, they understand that investors will tend to place their stops just above or below a certain support or resistance level, right? So if that level is hit, then stops will be triggered, okay? And if stops get triggered, we are going to see massive sell or buying, right? That will probably generate a continuation rally that may offer a very interesting trading opportunity, right? So determining where the market has itself is as important as learning to read charts properly, right? In fact, if you have been to any of Dale's webinars, he usually talks about stop hunting, right? The stop hunting is trying to detect where those stops are placed. That's why I also believe that determining support and resistance is the primary technical analysis you need to do daily basis before starting trading, okay, to determine where to place your trade. I believe that in general, right, when a support or resistance is broken, even in the short term, the continuation rally will work if it will give, right? So, as an example, I was watching this chart of as an example, okay, of the Australian dollar, and it has several intraday highs, daily highs, weekly highs around the 93.80 price. The pair has hunted several times around this level a couple of years ago, right? And once the level gave up, right, continuation rally has been extremely interesting. I know I have chosen big time frames for this presentation. I have told you which ones I believe that work in bigger time frames, which ones don't work in small time frames. But in this particular case, when we are talking about support and resistance levels, I believe that we can determine this kind of levels both in the 4 hours and even in the hourly charts that will help us see where the market has its stops in the short or in the mid or in the long term, okay? Anyway, keep in mind that on support or resistance area, a certain level, like this particular one, in this particular example, right, it's an exact price. It's not that we are talking about 93.82, okay? As you may see, we have several lows just a bit below and several failed attempts to break higher and suggestions around those levels. This is also a good sign that a certain level will be broken. Price tends to remain close to it, right? Going up and down, okay, unable to clearly break it until it finally does, or retrace, right? So this consistent moment is that we need to be aware. How do we terminate an entry market when we have this one? I believe that will depend on the time frame and the study. Okay, if you're working with daily charts, right, you will need at least price to break at least 50 pips of that certain level, right, to extend its rally outside of the board. We need to get away from that area, right? As long as the price keeps striving with the level and trading up and down around it, okay, that's not the right moment to break the market. You can also take a look at a recent high and lows, okay? In this particular case, we have this high and this low for the first candle, and we have 4 days inside that one, right? So I will be waiting either a break of this high, of this low, of the first blue candle, bullish candle, okay, to confirm market entry. If we price breaks below that historical low, because in this particular case it's historical, at least in the short term, there's a good chance the price will probably slide strongly. And the buyers will be giving up and the sellers will be winning the battle, right? On the contrary, if the price breaks above this high, as we have seen in this particular case, sellers have been the one to give up, right? And the buyers gained the buy, right? Anyway, one last thing before we jump to conclusions and questions. Let me remind you, nothing is 100% accurate in trading, okay? There is no such thing as a perfect trading strategy, a perfect chart that gives you all winning trades with no losses in the middle. There is no holy grail in here, right? Losing is part of trading. So balancing wins and losses and understanding the business part of itself is your second step to success. Of course, you may need to win more than you lose, right? It's not worth it. Anyway, that comes from another stream, another thing that we may not discuss today, or we would stay here forever. Anyway, and as a conclusion, I would like to say that price is everything, so we need to learn charts. How do we learn to read charts? We pay attention to relevant highs or lows in price related to the time frame under analysis, right? If we are trading in the early chart, we may want to see highs or lows in price. Previous session high, previous session low, current session high, current session low, right? Those relevant highs and lows, how do we determine this relevance? That way, session highs or lows, daily highs and lows, right? Intraday ones, those are the ones that we need to determine. We may also pay attention to historical information both in price and indicators. As they taught us, if we have an indicator reaching an historical low or high along with price doing exactly the same, there's a good chance that we will see a rally finally, a trend finally exhausted, and the beginning of a reversal. Also, watch market volume by measuring the length of candles, particularly when three main markets are open: London, New York, and Tokyo. Don't try to measure volume. We have in fact no volume once. For example, New York closes and early Australian market, right? The full volume market comes when Tokyo comes into play, right? So we are not going to find too many volume candles in between US close and Tokyo opening. But if we have one, it will not be as reliable as one developed in the middle of a strong or main session, okay? Also, use technical indicators to filter what price action is already telling you, right? Don't use technical indicators as Bible, right? They are not the whole truth. Price action is the first true use indicators. They are there for a reason also. Seek for historical congestion zone that may act as support and resistance levels. As we have seen in the OCP, the certain levels, once it's broken, it all turns into a very, very interesting buying level, as in that particular case, buyers over $10. But also, use Fibonacci retracement in the daily or the weekly chart if we had a previous trend, of course, and prior behavior allows, so, right? If we are coming from a sideways market, there's no place for Fibonacci retracement, okay? But if you have a trend, a previous interesting trade, either in the daily or in the weekly chart, apply Fibonacci retracement. Stops are also hiding behind those ones, particularly the 38.2 and the 61.8% of those Fibonacci, right? If you are seeing that weekly Fibonacci, if you are seeing that daily Fibonacci, remember that the rest of the market is also seeing the same technical study as you, right? So let's give us a small example, right? If I'm bullish on a certain pair and the pair starts falling and it breaks below the 61.8% retracement of its latest bullish run, my logic would tell me that I am wrong and I need to close my trade, right? If I close my trade, I will be adding to the selling pressure the pair has, and will probably extend its life from that 61.8% towards the 100, which is 80% likely, mostly in the bigger major crosses, right? Above 80%, and between 81 and 84 for euro dollar, pound dollar, Aussie dollar, CAD dollar, and Swiss against greenback, right? So if I'm closing my position because I know that there's an 85% chance the price will continue going against me, right? The rest of the market is watching the same. You are watching that. So where I close my losing position, you open your winning one, okay? Take a look at that. And also, as I tell you earlier at the beginning, learn the currency's behavior and what the main driver is of that certain currency to determine its strength or its weakness, okay? If it is the fundamental outlook of the country or the area, if it has a correlation with stocks, or if it has a correlation with commodities, right? We have seen market over the last month purely movement of market sentiment, right? For example, I know this kind of correlations tend to change, but that they don't change that much. They don't change that much. Market has been trading with sentiment. It takes a little bad Eurozone news to trigger risk aversion and send the euro, the pound, it's lower against the greenback, right? And while everyone is focusing its attention in euro dollar, right, that losses maybe 50 bips. Most of the traders, right, mostly not ones, are ignoring that. While the euro is losing 50 pips, Australian dollar will be probably losing 100, right? So maybe you have one more pip spread in your Aussie chart, in your Aussie pair, in your trading platform, or 2 or 3 pips spread, and you don't want to trade it. But keep in mind that usually, right, the market is driven by sentiment, as it has been lately, right? Australian dollar and Canadian dollar are the ones the first to react and the ones that will react widely, okay? Anyway, okay, I have talked a lot. I have finished my presentation. I don't know if you have any kind of questions, comments, suggestions, ideas. I see you made no questions and no comments while I was here. Okay, it's your time to tell me what you think, or if you have any kind of questions, comments, or ideas. Okay, I'm seeing a question from Rama. What would be euro dollar support now? I know it's not the main subject of this webinar, but let me tell you that 136.08, which has been a weekly low, all the way to 135.50 price zone. Okay, euro is below 136.08. So I could say that if we lost this 36 area right now. I'm sorry, I was not watching the chart. 35.50 is next. And yes, I do believe Phoenix that euro will continue to fall down. Anyway, and back to the educative session, guys. Did you understand what I told you? Have you ever seen one of these webinars with this top hunting? Have you ever tried that? No. Silence. No. Okay. So, yeah, also, if Euro 131 has relative strength index, which one should prevail? Well, that's an interesting question. If when we reach below the relative strength index has reached and the high, but you are talking about, I don't know, 1,000 pips rally in the middle. Okay, no of those will prevail right now. It's not that one of those will prevail. You have to understand that relative strength index is telling you with its midline around 50, right? If we are below 50, then the euro will be probably bearish, and if we are above 50, the euro will be probably bullish, right? If we reach 8 of streams, 30 or 60, then we are approaching to oversold over both conditions. It's not telling me that one should prevail above the other. It's just telling me that we are reaching certain levels where the selling or buying pressure may start increasing against the dominant trend. Okay? Okay. No questions, no comments. Are you sure? Okay then. I'm not expecting corrections, Phoenix, in euro or pound or any other currency. I would expect dollar to continue to gain ground. She says, on the 06 sample deal, she could not have shorted, I think, unless relative strength not considered really high. Exactly. I was telling the opposite. But I have said to you that he self-hands, right? He wants to buy. I know I added my personal perspective. I would have shorted, right? But yes, that's a way of seeing the market. That's the idea today, is sharing both perspectives of the market, right? Yes, FX Rate has archives of some of his webinars, and besides, I believe on Wednesdays, right? He gives the daily webinar. So I will invite you all to come to visit him and learn a bit more of the stuff, okay? I would believe that Maud, okay, yeah, also, Maud will tell us where you can find his webinars also. Spin says, one, on Thursdays, yes. Sorry, I said Wednesday. Which indicator is better, relative strength, index, or stochastic? I don't know that they tell us, that give us different information, right? Relative strength index is giving us a buying, oversold over both conditions reading, while the stochastics are showing a cycle. I do believe that different market conditions will be needed to use different indicators. Using the stochastic oscillators, I'd prefer to use them usually in sideways markets, right? Because they go with the cycle. Of course, that cycle at some point will break. But relative strength index works better best with trendy markets, okay? I'd prefer to work with relative strength index in trend markets and stochastic in sideways markets. Anyway, thanks all for being here. I hope you have enjoyed the presentation and learned something new. And hope to see you back soon. Okay, guys? Thank you. Bye-bye.